Hello, good evening, and welcome to Unacademy. This is CA Devang Kothari here, and we are here to continue our introduction to the subject of SCMPE. Yeah. So let me know how many of you are there. Good evening and welcome. We had started with some basic introduction yesterday, introduction to the subject of SCMP, and what we covered yesterday we covered that how is this subject different from your costing subject at inter level, right? And we also learned certain necessary terms that are involved in my subject of SCMP, basic terms which are involved in the subject of costing. Okay. Now, before I proceed with that, some important announcements for you. Announcements that yes, at Unacademy we have launched a very massive discounts for all your subscriptions. 20% discount for all CA subscriptions. The offer started since yesterday, 27th of June, and the offer is up to 30 June. So take your subscriptions now. Use my code Yashas Live. Use my code Yashas Live to get 20% discount on your subscriptions. Okay? You can also avail the scholarships on Unacademy. They have scholarship tests which are conducted. Yes, Maruti, good evening. And the scholarship test will be conducted. The procedure is as follows. You can check out that on the Unacademy app. We have also launched the Iconic program for CA Final students. Iconic is the premium subscription. Under this premium subscription, you will get extra features. Extra features like one-to-one mentorship. You will be getting. You'll be getting printed copies of the study material. Doubt solving will be there. Also, there will be evaluated test series. Evaluated test series, as in the tests will be conducted and the test papers will also be checked. You'll be given feedback about your performance in the test. So trust me, it doesn't get better than this, right? That is your test series option there. Iconic subscription will be priced as follows like this. And in these pricing, you can again get 20% discount right now. Use code Yashas Live to get 20% discount on your subscriptions of Iconic program. Yes. Okay. So coming back to what we had discussed. So yesterday we talked about various different types of cost. We talked about some basics about costing, but at the end we discussed different types of cost like these over here. So tell me, any questions, any doubts in these types of cost? Because today we are going to continue this discussion. Is my audio very clear to you? We learned about all these different types of cost, prime cost, overhead cost, and we ultimately classified them into various components. Ultimately, six important components are there. Six components are important. Number one, direct material. Number two, direct labor. Number three, direct expenses. And then factory overheads, admin overheads, and selling overheads. So total these six items we are going to compile and bring them together to get the total cost. So my total cost is made up of these six items. That total cost is identified using a format called as cost sheet format. Okay? So next we will discuss about the cost sheet format. Before we go for that, audio is clear? Okay, good. So before we go for the cost sheet format, tell me any questions, any doubts in these discussion here? Any doubts in these discussions? What we did yesterday? Okay, then we'll try that in a format of cost sheet. First, let me show you a ready-made format of the cost sheet. See, the cost sheet format goes like this. Cost sheet is a format to identify total cost, right? And the total cost in my costing subject is what? Well, in my costing subject, total cost is my cost of sales. Yes, cost of sales is the name given to that total cost. This cost of sales is the total cost which is compared with the sales to get the profit. Yes, so cost of sales basically indicates the total cost of the units which I sell. Yes, you don't need a total cost of all the units, you need only the total cost of the units which you sell. Why? Because sales is the units that I sell. Profit is earned on the units which I sell. So the cost which I consider should also be the cost of the units which I sell. Now, ultimate purpose is to reach that cost of sales. To reach that cost of sales, we start with various other items. So let me first explain this format to you, and then we will apply that format in a question to identify the things. Okay? So first, to understand the format, see this. I will start my discussion from this item here. The first item that I discuss is direct material. Direct material plus direct labor plus direct expenses is called as prime cost. Well, we did that yesterday. We did that yesterday also, that total of all items of direct cost is called as the prime cost. Okay? Now, where are these costs incurred? Where exactly is that cost incurred? In the factory, in the admin office, in the showroom? Where exactly is this cost incurred? Can you tell me that? Come on, think. Where exactly is this cost going to be incurred? Is it incurred in the factory or in the admin office or in the sales or in the showroom or something? Yes, Razia. Razia, yes, you're right. These costs are definitely incurred inside the factory. Obviously, why? Because factory is the place where material is consumed. Factory is the place where labor is consumed, where direct expenses are incurred. If these costs are directly related to the production, if it is directly related to production, then it is incurred in the place where production takes place. Right? So basically, these all three are incurred in the factory. Now, all the direct cost, all the direct costs are always incurred inside the factory. All the direct costs are obviously always incurred inside the factory. But didn't we learn yesterday that even certain indirect costs are incurred inside the factory? Indirect cost. Which indirect cost is incurred inside the factory? Well, factory overheads is the indirect cost which is incurred inside the factory. Okay? So accordingly, after adding all items of direct cost, then I add the factory overheads. FOH means the factory overheads. It is also known as works overhead. Another alternate name for that, right? So all items of direct cost are incurred in the factory, plus factory overheads are also incurred inside the factory. So if I add all these items, which items? Three items of direct cost and fourth item of factory overheads. If I add all these items together, then the total which I get is called as factory cost. FC stands for factory cost over here. This stands for factory cost. Factory cost means the total cost incurred inside the factory. Okay? So FC is my factory cost, total cost incurred inside the factory. Now in this factory cost, you need to adjust WIP. Do you know what is WIP? Yes, the full form is work in progress. I don't want the full form. I want the meaning. What does WIP mean? Anyone? What does WIP mean? Incomplete products. Yes, the products which are not yet completed. Absolutely. So WIP are the units which are incomplete units. But my format over here shows that these incomplete units are minus, deducted. Why is it deducted? Why is it minus? Why is it removed? Well, it is removed because remember, ultimately you want to reach what? Ultimately, you want to reach this cost of sales. You want to reach the cost of the units which are sold. Well, are the incomplete units sold? No, incomplete units are not sold. So the cost of incomplete units is removed. Incomplete units are definitely not sold. So the cost of that incomplete units must be removed. And that is why I minus the cost of closing WIP. Basically, see, my factory cost includes all the cost incurred in my factory. So whatever money I have spent in my factory, is it necessary that I have spent money on only completed units? No, some of my money during the year, some of my money was also spent on incomplete units. So you identify how much money was spent on incomplete units and you minus that, remove that. You identify what money was spent on incomplete units, remove that, then what I get here is my factory cost again, but this is factory cost of completed units. See, the name of the cost remains the same. This was called factory cost or works cost. This is also called factory cost or works cost. Difference is just that this was my total factory cost and this is the factory cost of completed units. See, the name of cost is remaining the same because I'm not adding any new element of cost in between that. Okay? So this is my total factory cost. Remove WIP, then what I get is factory cost of completed units. I think yesterday some of you were asking me about factory cost. See, this is called as factory cost. So which elements are included in factory cost? Factory cost includes all items of direct cost plus the factory overheads, 4 items. Total is called as factory cost. Yes. Now once I get factory cost of completed units, this indicates the cost incurred inside my factory towards all the completed units. Now on that, I add admin overheads and some other items of cost. Now admin overheads can be of two different types. Admin overheads can fall over here or you notice admin overheads can also fall over here. So admin overheads can be admin overheads related to production or admin overheads can be general admin overheads. What's the difference? Let me tell you. See, all these things you might have done in your CA intermediate level, but I'm just clarifying things so that later on in final level you don't have confusions on this. Yeah, because at final level there are many other topics where there might be confusions. You cannot afford to have confusion in inter-level topics. Okay? So admin overheads, if it is a general admin overheads, then it is taken later on over here. If it is admin overheads related to production, then it is taken over here. What's the difference over here? Well, admin overheads related to production. Now, because this is related to production, so I say that this admin is incurred on all production units. This is incurred on every unit which I have produced. It is incurred on all completed production. But general admin is general admin because it is incurred. It is considered that you incur this on only sold units. See, basically, you don't incur overheads unit wise. You never incur the overheads based on units because it is indirect cost. But still, I say that general admin is the admin which is assumed that it is added to only the sold units. But Admin related to production are particular admin overheads which is incurred on every completed unit. Like simple, say for example, the cost of quality control. Quality control, like whenever a unit gets completed, for every completed unit, you are giving some efforts to check the quality of the product. So that checking a cost, quality checking a cost. If I'm talking about the cost incurred to check the quality, do you check quality for only the goods which are sold? No, you check the quality for all the production units. So if that quality checking cost is considered, it will be as my admin overheads related to production. Yes, yes, Maruti. Why can't production royalty come here? Well, Maruti, production royalty will come under direct expenses. I told you that. Because production royalty, Maruti, is directly related to production. You have to pay that royalty in order to do the production. But do you need to do the quality checking in order to do the production? No. Quality checking is done after completion of production. You see the difference here? Yes, royalty you have to pay in order to do the production. Quality checking you do after production is completed. So any cost which you incur after production is completed will come after completed units. Yes, so once I have the completed units, then I will add admin overheads which is incurred on all production units. Also, there can be packaging cost. You know, packaging can also be of two types. Primary packaging will come over here, while secondary packaging will come under selling overheads. Now, what's the difference? I'll give you example. Primary packaging. Now, when you purchase a new ball pen, when you purchase a new pen, then at the tip of the pen, they have a seal put over there. Have you noticed that? Yeah, the seal or the cover which is put at the tip of the pen, that cover is a kind of primary packaging. Primary packaging is necessary in order to store the goods. So, primary packaging is incurred the moment your production is completed. Primary packaging is incurred on every unit that you have completed. But secondary packaging is not required for storage. Secondary packaging is the packaging which is required for transportation. Like say the boxes, carton boxes. Yeah. So once my production is completed, as soon as the production is complete, you will put primary packaging on that. But as soon as the production is complete, will you put it in a box and seal the box? No. Boxing and sealing will be done when you dispatch that goods for sale. So secondary packaging is incurred only on the goods which are sold. Primary packaging is incurred on every unit which is produced. So there can be these two different types of packaging. Like in case of that ball pen manufacturing, the seal which is put on the ball pen is a primary packaging. You put that seal on every single pen. But every pen is not put in the carton box. That big carton box. That big carton box is used only for the products which are sold. So the cost of carton boxes will become secondary packaging. The cost of the seal which is put becomes primary packaging. Primary packaging is incurred on all completed units. Secondary packaging is incurred only on sold units. See, this is where my cost over here are different than the cost over here. Yeah, these items of cost are incurred on all completed units. Acha, tell me, will you incur primary packaging on incomplete units? Will you incur primary packaging on incomplete units? Obviously not. Yes, packaging will be done only after completion, right? Packaging will be done only after completion. Incomplete units are still inside the machine. So obviously on incomplete units, you do not incur any packaging. Even on incomplete units, you do not incur quality checking cost. When is quality checking done? Quality checking will be done after completion. Yes, so in short, on incomplete units, you don't incur this, you don't incur this. That's the reason why incomplete units are removed. And after removing incomplete units, then you are adding admin overheads and primary packaging. Yes, also sometimes you might get some scrap value of your process loss. You can get sale value of byproducts. Remember in your CA interlevel, you had the chapter called as process costing. You also had the chapter of joint products, byproducts. In those chapters, you might have learned about sale value, scrap value of the normal loss. You might have learned about sale value of byproducts. If any such sale value you are getting, that will decrease my production cost. So it will be minus over here. And after doing that minus, then the cost remains is called as my cost of production. Yes, that becomes my cost of production. Cost of production, the most important item in the cost sheet. Okay? Yes. So what's the difference between factory cost and COP? Factory cost is the total cost incurred inside my factory. But COP is the total cost incurred to do the production. It is the total cost incurred on all completed units. Because on my completed units, do I incur only the factory cost? No. On my completed units, I also incur admin overheads. I also incur packaging cost, primary packaging and all. So the total cost incurred on completed production is called as cost of production. Now out of this units which I have produced, is it necessary all the units are sold? No. Let's say 1000 units I have produced. But out of that, what if only 800 units are sold? So this means that remaining 200 units are unsold. Unsold units are called as closing FG. So just like unfinished, incomplete units are called as closing WIP, same way unsold units are called as closing finished goods. Okay? Maruti, good question. Whether cost sheet is made based on estimates or is it made based on actual? Well, Maruti, cost sheet is a format. You can apply that format to get actual cost. You can apply same format to get the estimated cost. Right? So when you are making estimates, you make the estimate as per this format. At the end of the year, when you want to know your actual profit, at the end of the year, if you want to know your actual profit, then again you make that same format using actual data. Right? So cost sheet can be used in any case, in actual as well as budget. See, cost sheet is a format. Like in your accounting subject, you have profit and loss account. P&L account format. That P&L account format can be used to get the budgeted profit, can same be used also to get the actual profit. Okay? Is that fine? Yes, do you get that? Okay. So after removing the unsold units, what remains are my goods sold, and that is called as GS, goods sold. Now, cost of production will be the cost that I get here. 1000 is the units of production. If 1000 is the units of production, and my cost of production I get from here. Let's say, for example, I get the cost of production as 10,000. So try to differentiate it. 10,000 is what and 1,000 is what. 10,000 is my cost of production. 1,000 are my units of production. I was thinking, how can we get estimate for scrap value? Oh, Maruti, definitely you can get estimate for scrap value. In fact, didn't you get the scrap value of normal loss in process costing? You estimate what will be the normal loss. Normal loss is the loss which is estimated. Yes, and the scrap value of that normal loss is also estimated. You know based on your past experience that what scrap value will I get for every defective unit. You also know based on your past experience that how many defective units I might get. everything can be estimated. Okay? Yeah. Okay. So 1000 is my units of production, 10,000 is my cost of production. Out of that 1000 units, 200 units are unsold. So 800 units are the goods sold. Now we want to find cost of the goods sold. We want to find cost of that 800 units. Well, here it is very simple. If 1000 units are having a cost of 10,000, out of that 1000 units, 200 units unsold. What will be cost of that unsold units? Two hundred units are unsold. Cost of that unsold units should be proportionately 2000, right? And you remove that cost of unsold units. So what remains is my cost of sold units, 8,000. Okay? So 8,000 is my cost of the goods sold, cost of the sold units, right? Now, why did I remove unsold units? Well, same reason, because ultimately I need the cost of the sold units. So you remove the unsold units cost, balance remaining is my cost of the sold units. Now that you have the cost of 800 sold units, on that you add the general admin and you add the selling and distribution overheads. General admin is incurred on sold units. Selling and distribution overheads is obviously incurred only on the sold units. Okay? So you add them both, what you get is called as my total cost of sales. This cost of sales compared with sales will give you the profit. Done? Yes, format, did you understand here? Now if you notice in this format, basically I have considered only 6 items of cost. I'll show you which 6 items. I have considered as such only 6 items of cost in this format. Number 1, direct material. Number 2, direct labor. Number 3, direct expenses. Number 4, factory overheads. Number 5, admin overheads, but that appears at 2 places, admin overheads. And number 6, selling overheads. So basically this entire format contains only 6 main items of cost. And the summation of these 6 items is called as cost of sales. Yeah. But while taking a summation of these 6 items, while making a summation of these 6 items, I have various other adjustments done in between. I have various other subtotals which you learn in between. With this format, you learn what is prime cost. With this format, you also learn what is factory cost. You learn what is WIP adjustment. You learn what is cost of production. You learn what is finished goods adjustment. Just like closing FG are deducted, similarly opening FG will be added. Why? Because opening FG are the units which were unsold in last year. Well, if they were unsold in last year, then mostly this year they will be sold, right? So you add the opening less the closing, it gives you cost of goods sold, and then finally it gives you cost of sales. Compare that with the net sales, will give you the profit. Done? Simple format. Yes. Now at the beginning of the format, the first item in my format is the direct material. Now you know direct materials can be given in 2 ways. Either they might give you direct material purchase or they might give you direct material consumption. Well, purchase or consumption, which is my cost? Material that I purchase, does that become my cost, or the material that I consume, that becomes my cost? Well, obviously, what I purchase is not my cost. No, Razia. What I purchase is not my cost. What I consume is my cost. See, Razia, what if I purchased material? What if I purchased material worth rupees 70,000? But out of that material, 70,000 rupees ka material that I purchased, what if I consumed material worth rupees only 20,000? So where did that remaining 50,000 rupees material go? 70,000 ka material I purchased, only 20,000 material I consumed. Where is the remaining 50,000 material? Well, that 50,000 material is still lying in stock. Yes, it is lying in my stock. It is lying as unused material. It is lying in my stock as unused material. When will that be used? If 50,000 rupees material was not used in this year, then when do you think it will be used? Well, it will be used in the next year, obviously. Yes, so whatever remains unused in this year goes to the next year, it will be used in the next year. So just like incomplete incomplete goods are removed, just like unsold products are removed, same way unused materials are also removed. Why to remove them? Because agreed that you have spent 70,000, but Razia, did you spend 70,000 in this year to do production? Did you spend 70,000 to do production? No, 70,000 you spent to purchase the material. Out of that, what comes in my production cost? The material which is consumed. Only the consumed material becomes my production cost. Right? Out of 70,000 rupees material that I purchased, 50,000 rupees material unused, you remove that. 20,000 rupees material is what you have consumed. In short, closing raw material is minus, just like closing WIP was minus, just like closing finished goods was minus. Yeah. And if closing material is minus over here, so naturally opening material will be plus. Because if this is my unused material of this year, then opening is unused material of last year, that will be added over here. Correct? Apart from that, you also see some other items here like purchase expenses, freight, transportation, loading, unloading charges. Yeah. Now, whenever you purchase material, well, you need to get the material delivered. The cost of transportation of material, any cost incurred to do the transportation of material, freight incurred on the material will be added to the material cost. Normally, students make a mistake that if I give you transportation cost on material, you might take that as a direct expenses. No, that is not a direct expenses. Any transportation cost incurred on the material, in fact, not just transportation, any cost incurred on the material until the material reaches my factory gate, any cost incurred on the material until that material reaches my factory gate, it will be called as material cost. Yes, it will be added to the material cost like freight expense over here, and it will be included within the material cost. So, yep. So any transport cost on material you add, any purchase return you remove, and also any scrap of raw material that you sell, sale value of material scrap you can minus, remaining amount is my net material consumption. This becomes my full format to get the consumption, and then from the consumption you go further, make the full format to get the cost of sales. Done? Did you understand the format? Yes, take a look at the format. Ask me if you have any questions. If not, then we can practice that in one example. Yes, so let's try that in question 1. Question 1 in my cost sheet format, you will find this in my book in chapter 1. Yes, see in my book Under chapter 1, the practicals that I have given in chapter 1 are basically not the practicals of CA final level. I told you that yesterday. The practicals that I have given under chapter 1 are basically pertaining to what? These are basically pertaining to some revision of inter-level. Yes, these are pertaining to certain revision of the inter-level, and you'll find them on page 1.29 of my book. Please check that page 1.29 in my book. I had shared the book link on the Telegram channel yesterday. Did you get that? Don't tell me, did you get my book? Bharati, so we estimate each and every cost before actual production and use it as the basis. Yes, you can say so. Yeah, obviously you will estimate all items of cost before starting the production. In fact, Maruti, before starting production, you have to estimate selling price. And to estimate selling price, you have to estimate all items of cost. Yes or no? Yep. Okay, and one suggestion, if you are planning to attend my regular batches are already running on Unacademy. You can join any regular batch. I have a batch running for November 22 exams, and in that November 22 batch, I will be starting with new chapter tomorrow morning. Yeah, tomorrow morning I'll be starting with new chapter. So if you want, you can join the regular batch from tomorrow morning itself. Okay, you get your subscriptions and use my code Yashas Live to get 20% discount on your subscriptions. And if you are planning to attend the regular batch, I recommend that you get my books printed. Yes, I've shared the soft copy of my books on the Telegram channel. You get them printed because printed copy of the book will be more convenient if you are attending the regular class. Also, you notice that in this chapter 1, I have given a ready-made format of cost sheet. So when we solve this in class, we will be simply filling up the format given in my book. I'll be just filling up this format given in the book so that we can save some time in writing this format here. Because I told you that at CA final level, they will never ask you to make a cost sheet format. I am showing you the cost sheet just to recap certain concepts of the inter-level. Yeah. So mostly the concepts which are a revision of inter-level, for these revision concepts in my book, you will see ready-made formats like this. Because see, I want to save time in unnecessary writing and calculation work. We want to spend more time in understanding and analytics in and analysis work. Okay. Okay, so question 1, let's see. From the following information, prepare cost sheet. Now, to prepare cost sheet, you are given raw material purchase, you are given opening stock of material, closing stock of material, direct labor, carriage inwards. Now, carriage inwards will fall where? Carriage inwards is, can I say, basically freight expense on purchases, because inward carriage is incurred at the time of purchasing. What about carriage outwards? Where would that fall in the cost sheet? Can you think? Carriage outwards, where would that fall in the cost sheet? Carriage outwards, I'm asking. Yes, carriage outwards. Outward carriage is incurred on what? Do you have purchases going outwards? No, purchases are inwards. Carriage outwards, Razia, you incur them on the units which you sell. Yes, so do you incur carriage outwards inside the factory, Razia? No, you incur carriage outwards after completion of the goods at the time of selling. Yes, carriage outwards will fall under selling overheads. Carriage inwards will fall under purchase expenses here. So factory overheads, you are given 50% of labor. Admin overheads, you are given 20% of factory cost. Selling overheads, you are given 0.5 per unit. Value of opening WIP, you are given. Closing WIP, you are given. Completed units produced, you are given opening stock of FG, units sold, and all this data you are given. Let us start filling that data in my cost sheet format. They are asking you to make the cost sheet by FIFO method and weighted average method. Have you heard these names? Obviously, you should have heard these names, otherwise how would you reach CA Final? That question. But tell me, these names, FIFO and weighted average, these are two different methods. Methods for what? These are methods for what? Any idea? These are methods of what? No idea? Exactly. These are methods for valuation of inventory. These are basically methods for inventory valuation. Our inventory valuation we need to do where? Well, if you notice, my closing stock of raw material value is already given, rupee value. Razia, stock inward and outward. Okay, you can say that. So Razia, ultimately that will be used for doing valuation of inventory of finished goods, because raw material inventory value is given, WIP closing inventory value is already given, rupees 2000. Yes, so what we need to do now is valuation of closing finished goods, and yes, for that valuation of closing finished goods, we will learn two different methods: valuation of closing finished goods by FIFO method and valuation of closing finished goods by weighted average method. Both we will learn, but before that, let us fill up the other items here. I start from direct material purchases, and accordingly, I'll just fill up that format here. So to make that format, let me open the question on my book here, so that I don't need to scroll unnecessarily. So my direct material purchase is what I start with. Purchase is 14,000 rupees. Purchase expenses is my carriage inwards 2000. Purchase return not given in this question. Opening raw material is 4000. Closing raw material is 5000 minus that. Is there any scrap value on material that you have given? Not given. So tell me, what is the net consumption over here? Purchase plus purchase expense 16,000 plus 4,000 is 20,000 minus 5,000 is 15,000. 15,000 becomes my consumption, direct material consumption, plus direct labor and expenses. Direct labor you are given is 9,000. Yeah. Are you given any direct expenses in the question? Well, no, direct expenses are not given. So that makes my prime cost as 24,000 plus the factory overheads. Well, factory overheads you are given over here, and they say that factory overheads is 50% of direct labor cost. Okay, let me just mention that formula here. Factory overheads, they say, is 50% of direct labor. Then admin overheads, well, yes, admin overheads, they say, is 20% on factory cost of completed units. Well, we just learned that admin overheads can be of two types: admin overheads related to production or general admin. Well, in this question, they have not specifically mentioned that which admin is that. What will you assume this particular admin overheads to be? Here, the admin overheads given 20% on factory cost of completed units. Which admin do you think is that? Is that admin related to production, or is that a general admin? Come on, your opinion. The admin overheads given, is that admin related to production or is that a general admin? Yes, it is related to production. How do you know? Because they say that admin is 20% of factory cost of completed units. See, if it was a general admin, then you know that it is incurred only on the sold units. This admin, they say it is incurred on completed units. Well, here in this admin, if they say that it is incurred on completed units, so it is the admin overheads related to production. So I call this as admin related to production, 20% of the factory cost. I just mentioned that formula here. And then selling overheads you are given is zero point 0.5 per unit. I'll just put that over here. Selling overheads is at the rate rupees 0.5 per unit. Yeah. Okay, so let's start putting those values. Factory overheads 50% of direct labor. Direct labor 20. Direct labor is 9,000. 50% of that becomes 4,500, and then you add them up. 24,000 plus 4,500 becomes 28,500. 28,500, yes, becomes my total factory cost. Add opening and less closing WIP. WIP details you are given. Opening WIP 1,500, closing WIP is given 2,000. Add 1,500 less 2,000 makes this 28,000. 28,000 becomes my factory cost of completed units. On that completed units FC, you incur admin overheads 20% of FC. 20% of 28,000 makes that 5,600, I guess. Yes, 5,600. Add them up makes it 33,600 total. So you are not given any primary packaging cost. You are not given any scrap value of or sale value of the byproducts. So my total here becomes 33,600 is called as my cost of production. Now this cost of production pertains to my production units. What are production units in this question? Let us find out. Well, as per the question, how many units did I completely produce? My completed units produced is given 16,000 units. So if 16,000 is my completed units produced, so can I say that this 33,600 is the cost pertaining to how many units? This 33,600 is the cost pertaining to 16,000 production units. Yes. Now, you are also told in the question that opening stock of finished goods is given. Did you notice? Opening stock of finished goods is given as 2,000. No, yeah, 2,000 units. And for that opening stock, 2,000 units, they have already given valuation. Yes, 2,000 units valued at the rate 1.5 per unit. Let me mention that here. So 2000 units valued at 1.5 per unit makes the total value as 3000. If I add that up, this makes it 36,600. But out of these, how many units are sold? Your sold units you are given in the question. Units sold are given as 15,000. So therefore 16,000 units I produced plus another 2,000 units I had since opening stock. So total how many units does that give me? Well, that gives me total 18,000 units. And out of that 18,000 units, 15,000 units is what I sold. Out of that 18,000 units, 15,000 units is what I sold. So what is the remaining 3,000 units? Well, that remaining 3,000 units indicate my unsold units. Unsold units is basically closing finished goods. And you need to decide the valuation of that unsold units. See, valuation of opening FG you are already given, but valuation of unsold units you need to decide. How do you decide that? Well, you decide that either by using FIFO method or by using weighted average method. Well, this is where I need you to answer this. What is FIFO method? Come on, let me know. Let us find out what is your knowledge. What is FIFO method? And don't give me the full form. Full form is first in, first out. I know that. Tell me the meaning. What is the meaning of FIFO method? Yes, anyone? What is the meaning of FIFO method? First in, first out means what? How should I do this valuation of unsold units? Yes, it means that you sell those units first, which you produced first. Yes, so first in, first out means that the units which are produced first are sold out first. Now here you have total 18,000 units, which contains 16,000 units of production and 2,000 units of opening. Which was produced first? 16,000 or 2,000? Yes, so which was produced first? Well, my opening units are the units which are produced in previous year. Yeah, opening 2,000 units are the units which were produced in a previous year, while 16,000 COP are the units which are produced in current year. So please remember that COP always represents the units of current year and opening always represents the units of previous year. So as per FIFO method, yes Razia, stock purchased first will be sold first. Razia, your sentence is correct, but Razia, your sentence is applicable for a trading company, because trading company will purchase and sell. My example here is not a trading company. My example here is a manufacturing company. So manufacturing a company doesn't purchase and sell. Manufacturing company will manufacture, produce and sell. So redraft your wordings. Don't say that the stock purchased first will be sold first, because what you purchase is material. What you sell is finished goods. You never sell what you purchase. You sell what you produce. What is sold first? Whatever is produced first will be sold first. Yeah. So the goods which are produced first are sold out first. Now current year units are produced in the current year and opening units are produced in the previous year. So when I follow FIFO method, it is assumed that previous year units are sold out first. So these previous year units become goods sold first. If the previous year units are already sold first, so what remains unsold should be out of which units? If the previous year units are already sold, then anything which remains unsold must be the units out of current year. Yes, and if these are units out of current year, then they will be valued at the rate of current year. They will be valued at the rate of current year. Tell me, what is the rate of current year here? My current year cost is 33,600. Current year units are 16,000. Divide, get a rate of current year there. 33,600 divided by 16,000 makes the rate of current year as 2.1. So you see, you have two different rates over here. My current year production is costing 2.1. Previous year production is costing 1.5. Now, based on that, you have to decide that closing FG should be valued at what rate. Closing FG should be costing at what rate? Well, now I say that closing FG will be valued at the rate of current year because FIFO method is followed. Conclusion. FIFO method always means that closing stock is valued at the rate of current year. Yes, see, FIFO method basic assumption is that old units are sold out first. So what remains unsold is definitely units out of current year. Do you understand that? Did you understand this valuation rate for my unsold units will be 2.1 rate of current year. Yes? Okay. Now, let me also make you realize that FIFO method is not a real method. Even weighted average method is not a real method. It is purely an assumption. Yes, FIFO method is an assumption. Weighted average method is an assumption. Assumption about what? It is an assumption for doing valuation of my stock. Now, if my company follows FIFO method, so imagine, does it really mean that when a customer will come to my shop, when a customer enters my shop, ask for a product, will I go to my godown and search out the oldest product and bring that product for the customer? This is the oldest, you take this. Does that really happen? No. In reality, what will happen? In reality, what happens is that when a customer comes to my shop, I will pick up any product that I get and I give it to the customer. I don't specifically search for the oldest product. I will pick up any product that I got and I give that to the customer. But when it comes to valuation, at the time of valuation, I will assume as if I have given the oldest goods to the customer. FIFO method is purely an assumption. Is purely an assumption. So at the time of valuation, I will assume that oldest goods are given to the customer. So what I have in my stock are the latest goods. It is assumed that previous year goods are given to the customer. So what I have in my stock are the goods of current year. Yes. So chalo, based on that, my 3000 units will be valued at 2.1. Should give me what? Gives me value 6,300 minus that 36,600 minus 6,300 makes it 30,300. Now 30,300 becomes my cost of the goods sold. 15,000 are units of goods sold. 30,300 is my cost of goods sold. Okay? And on that cost of goods sold, you add the general admin. Well, in this question, there is no further general admin, but in this question, you have the selling and distribution 0.5 per unit. Now, this 0.5 per unit will be incurred on which units? This 0.5 per unit will be incurred only on the sold units, 15,000. So 15,000 into 0.5 makes that 7500. So 37,800 becomes my total cost of sales. Compare that with the sales. Sales, you are given selling price per unit, you are given 4 rupees, and sales units you have is 15,000. So 15,000 units sold at the price of 4 per unit makes my sales value as 60,000. So profit turns out to be 22,200. Done? Did you understand the format? Yes, come on, tell me, did you understand this format? Especially the valuation by FIFO method. Yeah, see, the FIFO method valuation is very simple, but the concept behind FIFO, which I told you here, the exact same concept will apply at many places throughout your syllabus. Because FIFO method is applicable at many places. FIFO method is applicable not just in valuation of closing finished goods. No, that same method can also apply in valuation of WIP. Same will also apply in valuation of material stock. We'll learn that at various places in the syllabus. So you had to understand the basics about FIFO method. That FIFO method means that my stock is valued at the rate of current year. Previous year goods are already sold, so my unsold units are valued at the rate of current year. Done? Yes. Then tell me, what does weighted average method mean? Can you tell me what does weighted average method mean? See, under FIFO method, if you say that previous year goods are sold first in, first out. So previous year goods are the ones which are sold first. So under weighted average method, what is sold first? Come on, think. Under weighted average method, what is sold first? Maruti, yes, that is the method which you are telling me. I don't want the method of calculation. I want the meaning of weighted average method. Under weighted average method, my goods are sold out of what? See, under FIFO method, you said that opening units are sold first. So same way, under weighted average method, tell me what is sold first. Come on, any idea? Random? No, it's never sold random. Definitely not. So I'll give you one example. I want you only to give me an answer, but I'll just give you an example. Let me see. I have some pictures here to show you. Just a moment. I don't remember where did I put that. Uh, Tell me, have you seen a device like this? What is this? Can you tell me? Have you seen a device like this? Not seen. That's a surprise. Well, let me tell you what exactly is this thing. I expected you must have seen this. Have you been to any hotels for a stay, vacation? Abhi, ever? Mostly these devices are used in hotels, restaurants, especially in hotels when you go for a stay. And the best part of a hotel stay, for me, the best part of a hotel stay is what? The best part of a hotel stay for me is the buffet breakfast that we get on the next day morning. Yeah, buffet breakfast, they have a lavish buffet with so many items in the breakfast, and you can eat your heart out. Yeah, in that buffet breakfast. I go to the hotels and I specifically choose hotels which have very good breakfast buffets, and whatever touring plans that I have, I will always ensure that my touring plans do not start before 11 a.m. Because morning से लेकर 11 a.m. तक I will be in the restaurant eating throughout the entire morning. इतना खा लूंगा that I don't need lunch or dinner at all. Yeah. Yes. So so the one of the device in these hotels is a device like this. This device is basically a complex dispatching device. Conflicts. These yellow things that you see here, these are conflicts. Conflicts. Yeah. The device works like this. If you notice, there is a knob at the bottom over here. Yeah. This knob is rotated. If you rotate this knob, then the flakes come out. You put the bowl over here, you rotate the knob, and the flakes come out, you eat them. Yes. Now, if this device is about to get empty, if the device is about to get empty, like at this point, then there are very less flakes now existing in that device. What will the hotel people do? Well, the hotel employee, the waiter, what he will do is he needs to refill this container. He needs to refill this complex container. But how is the refilling done? Well, in order to do the refill, they have given a lid at the top. So to do the refill, he will just remove this lid from the top, add more flakes from the top. And after adding more flakes from the top, you can again rotate the knob and get the flakes out from here. Did you understand that? Yes, can you understand how does this device work? If yes, then tell me that in this device, whether FIFO method is followed or LIFO method or weighted average method. Think and tell me what method gets followed in this device, FIFO, LIFO or weighted average. FIFO method, right? Why FIFO method? Because in this device you will notice that when the waiter will add flakes from the top over here, then the new flakes will be at the top, but the old cornflakes are still at the bottom. Say the red ones are the old cornflakes, blue ones are the new cornflakes. So now if you rotate this knob to get the flakes out, which flakes will come out first? Old flakes will come out first and new flakes will come later. This means that it will follow FIFO method. First in, first out. Correct? Yes, this is my example for FIFO method. Second example. Second example, let's say you people might be using vehicles for travel. Yeah, two-wheeler or four-wheeler or maybe three-wheeler. Yeah, you might be using some vehicles for your travel. And when do you fill up petrol in your vehicle? When do you fill up petrol or fuel in your vehicle? Do you fill up fuel when the fuel is completely empty? Do you fill up fuel when the fuel gets completely empty? Yes or no? Or do you fill up little bit before that? Yes, so you will do the fueling, you will do the refueling when your fuel tank contains less petrol, when it enters, say, the reserve mode. Yes, so when it enters at reserve mode, when the red light, fuel light starts blinking, then you go to the petrol pump. Now the moment you reach the petrol pump, your fuel tank already contains some fuel, and you are purchasing new fuel and adding it over there. Yes, so now imagine your fuel tank already had some old fuel, plus new fuel is added, just like what happened here. Sorry, here. Just like what happened here. Your fuel tank already contained some old fuel, and then new fuel is added in the same tank. Now, when you drive your vehicle, which fuel is consumed first? Now, when you drive your vehicle, does your vehicle first consume the old fuel and then consume the new fuel? Obviously not. Why? Which fuel is consumed first? So now when you drive your vehicle, which fuel is consumed? Well, now which fuel is consumed is basically out of the mixture. In case of this cornflakes example, which cornflakes will come out? Well, the cornflakes which were old cornflakes will come out first. But in case of fuel tank example, when you now drive your vehicle, then which fuel is consumed first? Well, obviously, now your vehicle cannot differentiate the old fuel and new fuel. Now, when you drive the vehicle, what is consumed out of the mixture. Well, that concept of mixture is my weighted average method. Why do you say that now why do you say that the now fuel is consumed out of mixture? Why? Why can old fuel not be consumed first? Well, simple, because it is a liquid. Cornflakes are granules, solid granules, but petrol, fuel is a liquid. So when your tank contains old liquid, you are adding new liquid in that, then your old liquid and the new liquid will get mixed up, and yes, it cannot be separated. So now whatever fuel is consumed, it is consumed out of the mixture, and after reaching home, whatever fuel is left unused is also out of that same mixture. Weighted average method is the concept about mixture. Yes, this concept of mixture is exactly my weighted average method. So see, whenever I talk about weighted average method, yaad rakhna, remember now onwards, whenever I talk about weighted average method, you always consider that weighted average method means the method about mixture. Yes, weighted average method is always a method about mixture. So under FIFO method, my closing material is valued at the rate of current year. But under weighted average method, my unsold units will be valued at what rate? They will be valued at the rate of the mixture. Now, where do I get rate of mixture? Mixture means what? Mixture basically means what? Mixture is the mixture of current year plus previous year. Mixture is the mixture of current year production plus opening units that come from previous year. Yes. So mixture rate. How do I get the rate of mixture from? How do I get that rate of mixture? Well, rate of mixture is mixture of current year plus opening. To get that rate of mixture, to get that rate of mixture, what I do is I will take my current year units plus my previous year units. So this 18,000 units is the mixture. Yes, you take the total units of the mixture, take the total cost of the mixture, divide. 36,600 is my cost of the mixture. 18,000 are the units of mixture. So my rate of mixture turns out to be 2.0333. Well, that 2.0333 rate of mixture is what I used over here. Yes, so 2.0333 into 3000 units makes it 6,100. 6,100 becomes my closing materials, closing finished goods as per weighted average method. Done? See, I'm sure you already knew the method, that weighted average method means total of cost divided by total of units. But now you realize that why is the weighted average method total of cost divided by total of units? Done? Yes, come on, tell me yes or no. Yeah, so accordingly you have your weighted average method valuation, and if I ask you to make the entire cost sheet by weighted average method, then would you realize that before this valuation of closing FG, all items will remain same. All items before closing FG would remain same. That is cost of production 33,600, opening is 3,000, total is 36,600. But only my valuation of closing FG will change, and accordingly the items after that will change. Done? Yes, this is my format of cost sheet, and the main thing we learned in this format is the discussion about FIFO method and weighted average method. See, okay. Now see, when you're attending my regular classes, I will ask you to copy down things that I have discussed. So I'll wait for a couple of minutes. If you have my book, please copy down this format in the book. If you don't have the book, then you can make a format on your own. Yeah, I'll wait for a couple of minutes. Please copy these workings. And after that, I will dictate some notes to you. Yes, I'll be dictating some working notes. I'll be dictating some notes that I discussed about FIFO and weighted average method. And the continuation here. And if you do that, get me the profit under weighted average method here. $22,000. Okay. Yes, are you done making these formats? Yes, okay, then I need to give you some notes. We'll add some notes after that. Notes you will copy in your notebook. I hope you have maintained a proper notebook, because you know whatever things we learn in class, I'm pretty sure that you may not remember that until your exam. Your exam might be 6 months or 1 year or maybe 1.5 years from today. So obviously it will be pretty difficult for you to remember all that till the exam. I'll be making you write notes regarding every concept that I discuss. Okay, Maruti, coming back to your same question again. Well, Maruti, I told you all these things are done for estimates as well as for actuals. But chalo, let me clarify your question once and for all. You know, the cost sheet format can be used for estimate, can be used for actuals also. But mostly it is used for estimates because my entire subject of costing is all about estimates. Yeah, my entire subject of costing is all about estimates. Well, that's the difference between costing subject and accounting subject. Yeah, Karo, what was the purpose of costing subject? In fact, I have that here. What was the purpose of my costing subject? Yesterday we discussed four main purpose in my costing subject. My purpose of costing subject, purpose number one is to determine selling price. When is that done? Beginning of the year or end of the year? When do you determine selling price? Beginning of the year or end of the year? Well, naturally, that is done at the beginning of the year. You needed to decide a selling price before you start selling the product. Now, if this is done at the beginning of the year, so tell me, in this purpose, my cost calculation, will that be estimate or will that be actual? Well, beginning of the year, do you know your actual cost at the beginning of the year? No, beginning of the year, you never know the actual cost. Actually, you will come to know at the end of the year after spending that cost. Right. So at the beginning of the year, you don't know the actual cost. At the beginning of the year, what you know is estimate. So yes, my cost over here is based on estimate. Second purpose. Second purpose, you calculate cost so that you compare with selling price to decide the profit. Now, when is this calculation done? When do you calculate profit? Well, profit calculation can be done either beginning of the year, can also be done at the end of the year, right? You calculate profit at the beginning of the year to see whether your product is going to be profitable or not. You calculate profit again at the end of the year to see whether you actually got that profit or not. Yes or no? Yes. Um, Maruti, do you remember? You must have done variance calculations at your CA intermediate level. Variance calculations. Yes, in variance calculations, what do you compare? Well, in variance calculations, you compare your estimate with the actual. Yes, now at final level, we will also learn variances in my profit. Profit variances, we will call that. Yes, now to calculate the profit variance, you need your estimated profit and you need your actual profit, both. So estimated profit and actual profit, both you will need. So for calculating estimated profit, you apply cost sheet format based on estimate. For getting actual profit, you apply the same cost sheet format using actual data. Do you understand this? Yes. So Maruti, answer to your question. All this process is done for estimate and it is also done for actuals, depending on what you need. If you need estimate, do the process for estimate. If you need actual, do that process for actuals. Huh? Yes? Okay, then write some notes. Note number 1, give the heading as stock valuation. Note number 1, give the heading as stock valuation, and under that write down first point. First point, write down. FIFO method means that opening units are sold out first. FIFO means that opening units are sold out first. FIFO means that opening units are sold out first. So what remains unsold? In closing FG? So what remains unsold in closing FG must be the units of current year. Must be the units of current year production. So what remains unsold in closing FG must be the units of current year production. Thus, closing FG is valued at the rate of current year. Thus, closing FG is valued at the rate of current year. Second, in the same first note, second point, give the heading WAM. Write down WAM means that goods are sold out of mixture. WAM means that goods are sold out of mixture. Out of mixture of Goods are sold out of mixture of current year production, and opening stock. Goods are sold out of mixture of current year production and opening stock. Thus, what remains unsold? What remains unsold as closing FG are also units out of the same mixture. What remains unsold as closing FG are also units out of the same mixture. Thus, closing FG is valued at the rate of mixture. Thus closing FG are valued at the rate of mixture. That's it. Chalo, that's the concept behind FIFO method and weighted average method valuation. Tell me, did you get that notes properly? Okay, did you get that notes properly? Yep. Okay. Then my note number 2 is a discussion regarding what is variable cost and what is fixed cost. See, again, this is very much core basics. In fact, this is basics from CPT level. But still, many times, many of you make mistake. Razia, last line of WAM. Okay, I don't have that line here, but I'll just try to repeat. Thus, closing stock is valued at the rate of mixture. Razia, last line. Thus, closing stock is valued at the rate of mixture. Done? Do you get that? Yep. Okay. So, what is variable cost and what is fixed cost? In general, if I ask you what is variable cost, you will always say that variable cost is the cost which increases with increase in units. And if I ask you fixed cost, you will say that fixed cost remains fixed even when units are increasing. Okay. Now, when you say that fixed cost remains fixed, does it mean that fixed cost always remains fixed, never changes ever at all? Is that true? Does it mean that fixed cost always remains same permanently, never changes at all, no matter what happens? Yes or no? Well, no. Fixed cost can also change. Yes, fixed cost can also change. So the definition of fixed cost is very clear. It remains fixed with increase in units. So because of increase in units, it will not change. It will not change because of increase in units, but it can change due to reasons other than units. Example. Example 1, let's say cost of direct material. Well, in case of my material cost, if I compare units versus cost, let's say if 1000 units material cost is rupees 10,000, then for 1200 units, what shall be material cost? 1000 units material cost is 10,000, then for 1200 units material cost will be 12,000. Naturally, with the increase in units, my cost will increase. This makes my material cost as variable cost. Yep. Example 2, fixed cost. Like say rent. Rent, when I say, is say rent of the machines. So I compare my units and my costs again. Say when I produce 1000 units, then my rental cost is rupees 10,000. But if I produce 1200 units, what will be my factory rent? If I produce 1000 units, factory rent is 10,000. If I produce 1200 units, what shall be my factory rent? Come on, you there? Well, it has to remain obviously same 10,000. That's the meaning of fixed cost. My fixed cost remains fixed in spite of increase in units. Simple example. Now, what if I tell you that my rent is as per rent agreement? Yes. What if I say that my rent is as per some rent agreement and it is written in the rent agreement that every year rent will increase by 20%. So what if my rent agreement contains a clause that rent will increase 20% every year? Now you see, let's say year 1 and year 2. Yes. So if my rent of year 1 is 10,000 rupees, if my year 1 rent is 10,000 and your rent agreement contains a clause of 20% increase in rent every year, so what will be my rent of year 2? Will my year 2 rent remain same 10,000? Well, no. 20% increase is the agreement. So my year 2 rent will become, yes, 12,000. Correct? Yes. So because there is an agreement written that 20% increase in rent, so my year 2 rent will then become 12,000. What if I tell you that year 1, my expected production is 1,000 and year 2 expected production is 1,200. So don't you see that between year 1 and year 2 units are increasing and cost is also increasing? Between year 1 and year 2 my units are increasing, my rent cost is also increasing. So can I say that rent cost has become variable? Can I say that rent cost has become variable? No. Well, don't you see that my cost is increasing when units are increasing? Don't you see that my cost is increasing with increase in units? So doesn't this mean that rent has become variable? Well, no. My cost is increasing. Yes. Units are also increasing. Yes. But is that cost increasing because of units? No. My cost is increasing. Yes. Units are increasing. Yes. But the cost is not increasing because of units. Well, rather my cost is increasing because of change in the year. Yes, so this makes you understand that fixed cost can also increase, but it will not increase because of units. You remember in your CA inter level, you had a chapter called as standard costing, where you did variance calculations. Let's see how much do you remember. Which all kind of variances have you learned in your inter level? Give me some variance names that you have learned. Give me some names of variances that you have learned. Some names, at least say 3 names of variances that you have learned. Material variances, yes. Material usage variance, yes. What else? Labor variances, yes. Tell me, have you learned overhead variances? Have you also learned overhead variances? Specifically, fixed overhead variances? Yeah. Now, fixed overhead variances, if you have learned, then many of you have a question. Many of you, Maruti, don't worry, no retention is not a problem. But if you have learned about fixed overhead variances, then I ask you a question. How can fixed overheads have variances? Fixed overheads will remain fixed. If the fixed overheads are gonna remain fixed, then how can there be variance in the fixed overheads? Well, this is the answer. This is the answer. Fixed overhead remains fixed, agreed, but no, it remains fixed with respect to change in units. It can change because of other factors. And if it changes because of other factors, then you get variances in fixed overheads. Yes, so fixed cost remains fixed with increase in units, but it can change due to other factors. Yes, but it can change due to other factors. That is one thing you should have understood. Acha, one more example. Say forget about year 1, year 2. Let's say we are talking about the same year. Standard costing was challenging for you at intermediate level. Don't worry, Razia, if you join my batch, standard costing will become your favorite at CA final level. Yeah, because it's absolutely very easy. In fact, well, out of all topics of CA final, I would say that standard costing is the easiest topic out of all topics in CA final. We will make it easiest, right? So have some patience. Now let's say we are talking about the same year. If I'm talking about the same year, then in the same year, will my rent cost increase? No. In the same year, if I produce 1000 units, rent is 10,000. In the same year, if I produce 1200 units, rent will remain same 10,000. Okay? Now this is my rent cost, this is my material cost. What if I ask you to identify cost per unit in each case? Well, let's try this. In case of material, what will I get as cost per unit? 10,000 is my cost when I produce 1000 units. So per unit is 10 rupees. Also, for 1200 units, my cost is 12,000. So per unit is again 10 per unit. So do you realize that in case of variable cost, my cost per unit remains constant. Important observation. Yes, while in case of fixed cost, when I produce 1000 units, cost is 10,000. So my rent per unit is 10. But when I produce 1200 units, my rent is still 10,000. So my per unit rent becomes how much? Now you notice that the same cost of rent will distribute over more number of units. If the same cost of 10,000 is distributed over more units, 1200 units, then my per unit rent effectively turns out to be 8.33 per unit. So do you notice one another difference here? In case of variable cost, per unit remains constant, while in case of fixed cost, per unit doesn't remain constant. But in case of fixed cost, my total remains constant. Yes, this is an important observation. It will be useful later on. So my variable cost remains constant on per unit basis. Fixed cost remains constant on total basis. See, that's the reason why whenever variable cost is expressed in terms of per unit basis, and whenever fixed cost is always expressed in terms of total basis. For example, if anybody asks me that what is my material cost, will I say that my material cost is 10,000 or 12,000? Does that make sense? No. If you ask me that what is my material cost in the company, I will say that my material cost is 10 per unit. If I'm manufacturing these pencils, for this pencil manufacturing, if you ask me that what is my material cost, will I say that my material cost is 10,000 rupees or 12,000 rupees? No, that doesn't make sense. If you ask me what is my material cost, I will say that my material cost is 10 per unit. So when I have to express variable cost, it is always expressed on per unit basis. But when I have to express fixed cost, if you ask me that, sir, how much rent do you pay? Will I say that I pay a rent of 10 per unit? Will I say that I pay rent of 8.33 per unit? No. If you ask me that how much rent do I pay, I will say that my rent is 10,000 per annum or maybe 10,000 per month, right? So in case of fixed cost, it is always expressed in terms of total. In case of variable cost, it is always expressed in terms of per unit. This you need to remember. Huh? Yes, Maruti. Sir, variance is difference between estimate and actual, right, sir? They are of the same year. Yes, Maruti, there is the difference between estimate and actual of the same year. And we will do that when we learn the chapter of standard costing. I use that here only to give you an example. Okay? Yeah. Okay, so this is a basic discussion regarding variable cost and fixed cost. You can copy the same. You can start writing the same. Copy this as your note number 2. No, Maruti, I never said that fixed cost variance is difference between this year and last year. No, Maruti, that was an example to show you that fixed cost can change. But the change as compared to last year is not called variance. Variance is a change as compared to the budget. I just wanted to explain to you that fixed cost doesn't always remain fixed. It can change because of other reasons. See, Maruti, it can change because of change in the year. It can change because of change in other decisions. Yes, it can change due to various factors other than the factor due to units. Huh? Yes, Maruti, that example I had given just to prove that fixed cost can change. Doesn't mean that example was variance. What is variance? We will learn that in standard costing chapter. Yeah. Why are you complicating things right now? Standard costing सीखेंगे. Patience. Yeah. Yes. Let me know once you're done writing this. Okay, then I have one more example for you. Example 3. See this. When I produce 1000 units, my cost is rupees 10,000. But when I produce 1200 units, when I produce 200 units, then my cost is say 11,000. Well, then tell me, then in that case, okay, not 11, let me change that, it will confuse you. Let's say for 1200 units, what if I say that my cost is 10,600? So do you see that my cost is increasing with increase in units? Yes, if my cost is increasing with increase in units, can I say that this is a variable cost? Yes, variable cost. Well, think again. If my cost is increasing with the increase in units, does it prove that this is a variable cost? I'll repeat the question. Chalo. 1000 units cost is 10,000. 1200 units cost is 10,600. So what is the nature of this cost? Is this variable cost or is this a fixed cost? That's my question. Well, you see that with the increase in units, my cost is increasing. Well, with the increase in units, my cost is increasing. So can I say this is variable cost? No, this is not variable cost, because if it was variable cost, then it should have increased proportionately. If it was variable cost, then your per unit should have remained the same. Now check out what is per unit cost over here. 10,000 divided by 1,000. Per unit is 10 rupees. But in the second level here, 10,600 divided by 1,200. 10,600 divided by 1,200. Per unit is 8.833. So you notice that the per unit is not remaining constant. Now if per unit is not remaining constant, so it means that this cost is not VC. If it is not a VC, then can I say it is FC? Is that a fixed cost? Well, no, it is not even fixed cost, because total is not remaining constant. If the total is not constant, so I say this is not fixed cost. Then what exactly is this cost? Yes, so what exactly is this cost? It's neither a fixed cost nor a variable cost. What kind of cost is that? Well, if it is neither a fixed cost nor a variable cost, so it means that this is combination of fixed plus variable cost. Yes, you can call that as semi-variable cost. It means it is combination of VC plus FC together. You can call that as semi-variable cost, SVC. Yeah, and we need to learn a method about how to separate VC and FC out of SVC. We need to learn a method that how is VC and FC gonna be separated out of your total cost, out of your semi-variable cost. That method is called as high-low method. That method is called as high-low method. So my next discussion in my recap, the next discussion in the revision is to understand what exactly does high-low method mean. Tell me, do you remember any such method? Tell me, do you remember any such method? How to separate FC and VC out of the total cost? Well, if you remember, that's good. If you don't remember, that's okay. We will continue that in my class tomorrow. Yes, tomorrow again, I have a class with you, 7 p.m. YouTube class. And tomorrow I am actually having two classes. 7 p.m. we'll have a YouTube class, only 1 hour. After 1 hour, we will have a special class on Unacademy. Yeah, so tomorrow I can also give you a first-hand experience of how our classes coming up on Unacademy. I'll give you a first-hand experience that how do you see classes on Unacademy. So please get the Unacademy app downloaded, because my tomorrow's session is in 2 parts. First 1 hour we will meet on YouTube. Then I will guide you how do you access my class on Unacademy. Second 1 hour we will have it on Unacademy. Okay? Yeah, it will be a free class on Unacademy. So let's see. You will get an experience at how our free classes watched on Unacademy. Okay? Yeah. So we'll discuss that high-low method in my class tomorrow, same time, 7 p.m. Right? That's all. Thank you very much. Good night and see you tomorrow.